Hello everyone, welcome to the Trendline Invest channel. So today we're going to have a masterclass session on a positional trading strategy which can actually give you very good returns. We're looking at least 5 to 7 hour returns, which is probably 40-50% returns depending on the stop loss that you have. Now this could be used if you are a beginner. You can look at this if you already know something around price action. You can use a strategy for positional trading. Okay, here we're looking at stocks where we might hold them for probably 3 months or a few weeks to probably 6 months as well. So stop losses, if they hit, they will be 1 to 2 weeks. But if your stop losses don't hit, you can probably hold them for 3 to 6 weeks period, or even 3 to 6 months period, or even more. Now, they are purely trend following strategy here that I'm going to discuss. And this screenshot that you see here is what I'm going to discuss. I shared this on Twitter, but I thought let's make a detailed video, including the strategy of for entries, exits, pyramiding, and let's also take a live example and see how it works. Okay, so let's get started. The first thing is scanner, right? So what scanner should you be focusing on? Now I have 4 scanners usually that I use, but if you want to look at positional trading or even swing trading, the only scanner that I use is this one. So you can look at CCI daily crossing 100 scanner. Now here we are looking at stocks which are already in uptrend on the weekly charts, but are just changing trends on the daily charts. So the scanner link is this. You might also find it in the description. Do check it out and do test the scanner multiple times before you start using it. So let's move on to the rules itself, right? So first of all, which stocks are these? Is this strategy applicable on? You can apply this on IPO stocks, stocks which have been listed and has been in a complete downtrend for many weeks and months. And if they are making a higher high on the weekly charts for the first time, and then you can apply the strategy. You can apply also the strategy on F&O stocks, cash stocks, with literally any stocks in the market, right? There are some rules that you have to follow. So first rule is the trend of the stock on the weekly charts should be up. Now, we look at an example shortly, but what do I mean by trend should be up? The stock should be in a uptrend structure. The stock basically should be going up and up and up, right? That should be the trend on the weekly charts. Now, the second thing is we are looking at stocks on the daily charts which are in a prior downtrend, but which is just about to change. But before that, the stock should have reversed from a major support zone at least 2 to 3 times. Or here, we're looking for stocks which are reversing from a major support zone for the 3rd time. I'll again show you an example. I'm just discussing the rules for now. Then the relative strength on the daily chart should be about the 52-day moving average. I'll also discuss that shortly. And the volumes should be greater than 20-day moving average if you're entering for the first time. Now the strategy itself, we'll discuss this shortly, but in short, you're going to buy the first higher high on daily charts if the stock is already on an uptrend in the weekly charts. Secondly, your stop loss and trailing stop loss could be on the pivot lows. We'll discuss that also shortly. And you will buy 50% at the first higher high and remaining at the next higher high. All of these, I will discuss them with a proper example. The total risk in a single position that you are having. Now, for example, if you're buying a stock, let's say stock A, the maximum risk you will have in that stock at any point in time should not be 1% of more than 1% of your portfolio. So if your portfolio size is 1 lakh, then your maximum risk here should not be more than 1,000. Now it's completely different. The quantity is completely different from risk. I'll also discuss this shortly, but your risk cannot be more than 1,000 rupees. So if your stop loss hits, you should not be losing more than 1,000 rupees. And the maximum allocation should be 20% of your portfolio. But my suggestion for you, if you're a beginner, should be around 10%. Now this strategy, if you do it and practice it well, and if you apply it well, trust me, you will make much higher returns than a mutual fund, and you can completely move to this positional trading strategy in the next 2-3 years. Once you have tested the strategy, practiced it for at least 50-100 trades, and you develop a liking towards the strategy. Now remember, in trading, you cannot copy someone else's style and just expect to make profits. You need to experience the strategy, you need to understand the strategy, you need to understand what it does, understand the risk, and then trade the strategy. So let's move on. First thing, what I'm going to do today is to show you what are these indicators that you have to set up in TradingView. First thing, you need CCI, which is nothing but commodity channel index. You need the pivots indicator, you need the relative strength, RS. This is not RSI. And you need the volumes along with the moving average of volumes. Okay, so let's move to TradingView and let's find out the template itself first. So here I have the TradingView in front of me, and here if you see, I have a default template here, which is my CCI, my relative strength indicator here. And in case you want to know which CCI to use, you can just go here and type commodity channel index right? And you can use the technicals default one. And then you have to go to relative strength, and you should find something by stage analysis, and then you can also use that one. It's just taking a bit of time. Just give me some time. Yeah. So here, if you go, you will find stage analysis Mansfield RS, right? By stage analysis, which have around 795 likes. It might have much more when you are looking at the video, but this is the indicator you have to use. Okay. And then what you do, once you add it, you go to the settings here and you change this to 34. The length should be 34. And then I have not changed anything in the style and visibility. You can use the default settings that you have. These colors is something that I changed it for my visibility style, right? And here in relative strength comparison, you need to change this to CNX 500 and change this to 52, and length is 1. So this we will not use, but just the 52-week day moving average is something that we have to use. And then on volumes, you can go here, and this is something that you need to change. You go to style and you enable volume MA, and you say okay, and then you come here and yeah, it's already plotted here, right? You see the green arrow here. Right now, this is the TradingView template that you need to set up, and then you can save this as a template and you can use it how you want. Now, how do you save it? You just click here and you save this as an indicator template. You give it a name and then it saves it, right? Here, I've already saved it, so it doesn't save again. But in case you make some changes, you will see a name asked and you can just save this as a new template. Now, that's how you set the TradingView template. Now, let's go back to the strategies now. Okay, so now we've discussed the technical analysis tools that you need. Now, let's move on to the strategy. Now, the strategy is has a set of rules. The first rule is weekly trend should be up. Now, the pivots indicator also is something that you have to plot. You can plot that using pivots high-low indicator. Just search for this indicator in TradingView and you'll find that. Now, this is for beginners. In case you don't know how to find whether a stock is up on the weekly charts or not, or daily charts or not, you can use the indicator. But if you are already experienced, you will know how to find an uptrend, right? Now here, if you see when you plot the pivot high-low indicator, you will see these numbers there. Now these numbers are nothing but it points to the significant highs in the entire move, right? Now if you see from this to this was a significant move and this was a significant point. And then the stock dropped and again went higher. So these two becomes a very good point. Again, the stock dropped. So again, the indicator plots these points. Now, when the pivots kind of go lower and lower and lower, that means the stock is in a downtrend. But when the pivots go higher, so when the price crosses the previous pivot and it goes higher and you see the pivots are high, then the stock is in an uptrend. Now, the primary rule for this strategy is the weekly trend should be up, which means your pivots need to be above the previous pivots, right? So here also, if you see, the pivots are higher and higher. Now, it's okay if just one pivot is down, but both the pivots should not be down. For example, here, if you see this pivot and this pivot, both are trending down, right? You see this is going down, this is also going down right here, right? Now, when both are up, the trend is up. So you need to find first the weekly chart. The trend should be up. So it should be going up like this, right? Now, that's the first rule. Next rule is price should be reversing from a major support zone. Now, what is a major support zone? A major support zone is nothing but a point from a zone from where the price has reversed multiple times. Now, always, if you want to find a major support zone, switch to the weekly or the monthly charts. Now, in this case, I propose using the weekly charts. On the weekly charts, if you see here, now the price has reversed multiple times from this zone over here, right? Now, this lines I've marked here is a zone. It's not a single price point, it's a zone. So this zone is between 840, 830 levels, 830 to 850 levels around, right? And if you see the price rejected here, then it went up for 6 weeks. It got rejected twice, then again got rejected from here, then again it got rejected from here. Now remember, for this strategy, the price should have been rejected at least 3 times, at least 3 times. Now, why do I say at least 3 times? Because when a price has been rejected more than 3 times, it means that this zone is a very strong demand zone. What do we mean by demand zone? Demand zone is nothing but from where there's so much of buying power that the price reverses and goes back again up. So there's much less selling on that zone because which the price holds and the buyers take them up again. Right now, that's a very, very, very important rule because that's the primary base for our entire strategy. Now, if the price doesn't respect more than 3 times, then we will not take a trade on that chart. Move on to the next chart. Okay, you will find hundreds of charts. You'll find a lot of signals. You don't have to have many trades every day, right? So here 1, 2, 3, 4. So it has reversed 4 times. So this now becomes a very clear stock in our watch list, and we have to keep it in our watch list. So now once you have found the stock in your watch list, then you go to the next stock. Now ideally ideally it will be the other way around. Now the stock might have come here, and then when you look at the chart will look like this, and that's how you shortlist a stock, right? Now it should ideally be the other way. Now let's move on to the daily charts to show you how to enter the trade. Now ideally the first time the stock would have come on your scanner is when CCI daily 100. Now remember I told you the scanner that you will be using is CCI daily 100. Now when you scan a stock, you will find a stock something like this on this day, right? Now the first time the stock would come on this day when there is a red candle, right? And when CCI has crossed 100 over here. Now remember my rules, volume should be greater than 50-day moving average. Now here if you see, the volume is hardly there. There's hardly any volume. You can't even see the bar. So you straightly ignore this stock and you move on, right? You don't look at the stock. Now again, after a few days, the stock again came in the scanner here. This line that I marked here. Now here the price closed above the previous pivot high, which means the first rule, the stock is in an uptrend on the daily charts. Now the stock is on uptrend. The weekly charts here, we saw this, and now the stock has come in a scanner here, which means the stock is in an uptrend also on the daily charts. So both the time frames are now in sync. So the weekly charts also is an uptrend, daily charts also is in an uptrend, and volumes have been excellent. We've had a crazy spike in volumes, and we had CCI above 100 and relative strength also. The black line is also above the green line. Now that's a very, very important rule, right? Without relative strength, don't expect the stock to perform. Now, if you don't understand relative strength, there's a very detailed video I did, especially on relative strength. Do check it out. It is on my channel. Just search for relative strength and you will find it. So once a stock comes here, comes scanner, and the price crosses the previous pivot high, the first entry for us is going to be on this day. You can either take an entry on the next day morning or just before the session closes around 3:15, 3:30. Between 3 and 3:30 you can take a trade, or just wait and you take the next day. Now remember here, I am not going to look at the candles here, right? Because usually when a trend is just changing, you will find many candles with long wicks on the top. Now it doesn't matter if you look at this candle and not take a trade, it is up to you, but I propose ignore the candle wicks. You take a trade with your first position, which is at 9:45 on this day close, and keep a stop at the swing low, at the pivot low. Now it is very, very important to keep the stop at the swing low and not anywhere else. It is okay because this is just our first entry. We will take more entries. The first entry, take a trade, and let's see how it works. Now remember, any strategy, even if you have a 50% win rate, you will make money. So we expect 50% of the trades to go in loss, but we don't know which one will go in loss. So you have to take every trade that you look at. Now in this case, we took this trade, first entry 9:45, stop loss at 8:34. I have made this a round number instead of 843.1. I made it round. You can also keep it at 8:30. It is up to you, right? 8:34 is what I kept, which brings us to 11.7% stop. Now, how do you calculate how much to buy? That's the next question. Now, here we will risk 0.5% of our portfolio risk. Now, assuming your capital is 1 lakh, what is 0.5% of 1 lakh? That is 500 rupees. So if your stop loss hits, if you buy the stock at 9:45, and if the stop loss hits, the maximum you will lose is 500. Now, this is the most important part for any strategy: position sizing and calculating your risks. Now, if you want, you can increase this to 1%. It's up to you. But I suggest for your first entry, do not increase more than this. Right? Let's see if we take this so much of risk, whether the stock will go in our direction that we want. So you have decided to take a 500 rupees risk. Now, how much can you buy with 500? So what you have to do is put this 500 here and divide that by your stop loss points. Now, stop loss here is 111, which is 945 minus 834. Divide 500 by 111 and you get 4.5. Round that to 5, it's totally fine. You can buy 5 shares, which is nothing but 945 entry price, 5 shares, and that brings us to 4725 of the overall 1 lakh that we have, which is nothing but 4.7% of your overall capital. Now, this part is about how you calculate how much to enter the first time. Now, if you do not understand this video, go back, pause, take a pen and keep papers separately and calculate and see how it works. Take the chart of credit access and go through this. Okay, so that's the first step. The second step is after you buy here at 9:45, you will not add until the next pivot is formed. right? Now, when will this pivot form? The pivot will form when you have the price below the pivot point for 10 days. Now, I'm using the default pivot high lows indicator settings as 10, 10, 10, 10. You can also use 5, 5, 5, 5 if you're aggressive. But I propose if you're beginning and if you are first trading the strategy for the first time, use the default setting. Now here, until we find a new number over here, we will not enter the second position. But once you have the second number here, then wait for a close above that second entry point, right? So we should wait for a close above this point over here, right? That's the first time it closed above 1022. Now, in case the close happened here, you can also enter here, but here we had a wick and the price went down again. So we will not enter. Remember, the first and second entries are the most important entries because we are just entering the stock when the trend is changing and going higher, right? So there's a lot of headroom to go ahead. So don't rush, let the stock form its base and then you enter. Now here, once the price closes above this point, you can enter your second position. Also, I mentioned this point here. If you understand price action very well, you can also enter here at this point, right? When the price crosses above this point over here. Now that's a very good entry point here. But if you're a beginner, stick to this rule for some time until you understand price action and then enter. Okay, so the first entry was 945. The second entry is around 1030, which is the close over here. So that's the second entry, which is 1030. Now for the second entry, also you need to calculate your position size. So remember, the first entry we took 0.5% risk. Now the second entry also we will take a 0.5% risk, which brings us to a maximum of 1% risk. But net, you will understand slowly that it is not entirely 1%. I'll come to that shortly. But the second position, you're going to calculate your position size depending on 0.5% risk. Okay, the stop loss here is 960. How did I calculate the stop loss? I kept the stop loss here. Now, ideally, this is a kind of a cup and handle or whatever we call it. For me, this is a nice rise and we had a dip and we're going higher, right? So for me, this is a nice point to keep a stop loss. If you're a beginner, you can also keep stop loss here, but that'll be too much of stop loss. So I keep it here, especially when I see a strong candle with a nice consolidation here, right? And the pivot has closed and it has closed higher, right? So you can keep the stop loss at 960 over here. Now, if you keep a stop loss at 960 and if you have an entry at 1030, you have a stop loss of 70 points, which is 6.8%, which is an excellent stop loss, right? Now here you will get a much higher position. Remember the first entry, our stop loss was 11.7%. Now here a stop loss is less. Now here, if you risk 0.5%, which is nothing but 500 rupees on your overall 1 lakh capital, you can buy 500, which is the risk, divided by 70, which is stop loss, which is 7 shares. Now here, see, I have rounded off it below, right? Now previously I had it higher, right? So here I am taking the lower point, which is 7. So I can buy net to net 7 shares for the new risk that I'm taking, right? Now the total value would be entry price into the number of shares, which is 7210, which is 7.2%. So the second entry alone, we are taking a total of 7.2% of our overall capital and we are deploying that money. So the total position size, combining your first entry, which was 4725, plus your second entry, which is 7210, brings us to a total position size of 11,935 rupees, which is nothing but 11.9% of your 1 lakh, right? Now, that is a very good position size for a position trading strategy. Okay, I hope till now it's clear. If not, do let me know in the comment section and do let me know if you're enjoying this video. Also, if you are watching my video for the first time, please subscribe to my channel and do share this video with your friends and family as well, because a lot of people are struggling and this video would be one of the best videos that they've ever watched. Okay, let's continue. So your average price now comes down to 11,935 divided by 7 shares here and 5 shares here, which brings us to a total of 12 shares, which is 994.58. So the entire, we bought totally until now 12 shares and average price is 994.58 and total money deployed is 11.9% or 12%. So now moving on to the risk. What is the total risk that we have now? So risk on the first position, we have no risk on the first position. Why so? The first position, we had a stop loss of 834 and now that stop loss has been revised to 960, which means in the first position, we are actually in profits, right? First time, I'll repeat this again. The first entry was 945, 834 was stop loss, and now the stop loss is revised to 960. Now, whenever revised stop loss, it has to be revised for the entire position, right? So the first position is now in profits of 15 rupees, 960 minus 945. If the stop loss hits at 960, it's 15 rupees profits, and we have 5 shares Here we have 5 shares here, which brings us to a net profit of 75 rupees, even if the stop loss hits, remember, right? So even if 960 stop loss hits, we are at 1030, and if stop loss hits, we are still gaining 75 rupees in the first position. Okay, so which means net to net, we are actually less than 0.5% risk, right? Because here we took a 500 rupees risk. If you minus this 500 with 75, we actually have only 425 rupees risk in our entire position. How beautiful is that, right? Now, some people also go aggressive at this point. So total risk on credit access is 425, or just 0.425% of your entire capital. Now, this risk is nothing compared to the rewards that you're going to get if this large base breakout works, right? So you're taking a position somewhere here, and let's imagine if this works out, you're going to have a huge profit, right? So moving back to this, I hope this was very clear. In case it wasn't clear, pause this video, take a pen, paper, and please do these calculations for you to understand better. So let's move on. If you're an experienced person, how can you make this even a bigger trade? So if you're an experienced person, you can add another 0.5% risk, because remember, our total risk is 0.425. And if you think this trade is just setting up, you can add another 0.5% capital and take a total risk of 1%, which means you will have 5, which is the first entry shares, 7 from this, and another 0.5% risk if you take, it's another 7%, right? 7 shares, which means totally you will deploy 19% of your capital, which is a very, very, very good position size. And do not go beyond this. 20% is a very good position size for a position trading strategy. And net your average price will now slightly increase because you're adding more on the second entry, right? So I hope this is clear. So let's move on. So you took your first entry here, you took your second entry here with a stop loss here, and then now the trade runs. Now, once you have reached a 10% position size, do not add more. Let the trade go where it has to go. Stop loss hits, you get out. You do not lose much, as we saw, right? So once your position size is around 10%, don't add more. And if you have experience, then you can add more, right? But how do you trail your stop loss? Now, whenever a stock moves up so much, right, don't panic and book profits. That's very, very important. If you're a positional trader, you should not be booking profits immediately, especially in companies which are very good and which are just breaking out from reversing from a major support zone. You can also apply the strategy to other strategies, other setups if you want, but don't book your profits immediately. Now, remember here, I'm using the 10-10 pivot high-low indicator. So wait for that to form and then trail your stop loss to that point, right? Until you don't form, this number is not formed, keep your stop loss here and let it be there. Okay, don't complicate it if you're a beginner. If you're experienced, you can take some profits around 5-hour, 6-hour trades. It's totally fine. But if you're a beginner, do not book profits yet. You need to first understand how price action works. Now, price action, how does it work? After an uptrend, there is always going to be a pause, always there's going to be a downtrend, and then it's again going to head higher. But it will not, most likely it will not come back all the way down and hit your stop loss. There's a very less chance. Once the stock takes off, there's very less chance it will come back to your stop loss. Now, there's a chance that the stock will go here and come back again. But once the stock rallies so much, especially good companies, they will not come back all the way down. Trust me on this, and do check out charts and you will find it more agreeable, right? So once the stop comes here, then you trail your stop loss from 960 here to 1168, which means you are sitting in very, very good profits, right? So even if the stop loss hits today, I will still be booking a very good profit. So how much will you book? Let's check that. So how would I have this position done, right? So you had average price of 944.58. You bought 12 shares and you bought total quantity of 11,935. So as of today, the current market price is 1314, which means you had 1314, 12 shares, and you have sitting on total value of 15,768. So total profits as on today is 3833, or 3.8% of your portfolio. Now remember, we risked hardly 0.5% and we have gains of 3.8%, which means you risked 500, you gained 3833, which means you're sitting on a risk reward rate of 7.66. Now you might say this is a hindsight trade, but go check out any charts. Go check out Subros, go check out a lot of other stocks like Kriti Industries, probably many other stocks are there. Go check them out and you will see the strategy working beautifully. You need to win 40% of your trades, and if you can make such good risk rewards on these 40% or 50% of the trades, you will do wonderfully well. Trust me on this, and do check out stocks, apply the strategy and see how it works. But you need to do this and apply this at least live on charts from the past and understand how this works before you start trading it. Now, even if the stop loss hits today, right, which is 1168, right? Our stop loss was 1168. Even if that stop loss hits, you will still gain a profit of 2081 rupees, which is nothing but 4 times the risk that you took, right? So that's still a very, very good profit, right? Now remember, even if you get 50% of trades, such trades, you will do extremely well in a year, right? You do not have to get every trade right. Now that's the first thing that you have to accept in trading. Do not expect every trade to be in profits, right? So that's something I wanted to cover. I hope you enjoyed the strategy till now. Now there is a stock setting up beautifully. I covered this in the Sunday video, which is Renica Sugars. And if you see, we have the exact same setup. The stock is in an uptrend. You see the trend, the pivot is heading higher, the pivot is heading higher, and the stock has reversed 1, 2, 3, 4 times. So even if you consider this 1, 2, 3 times. And this week we are having some beautiful candle. CCI is turning back, also rate of strength is turning up. So this is a very good trade that you can take and apply the strategy and see how it works. And if the stop loss hits, it's a very good learning. You will understand how you should exit. Okay, so that's it for today. I hope you enjoyed this video. Do share this with your friends and do subscribe to my channel if you did like this analysis. Otherwise, I'm going to leave you here. Take care, trade safe, and trade safe. Until I see you in another strategy video or another stock video. Bye-bye.